Hello, friends. As today is Sunday, and I was planning to make one small video for people who are more interested in fundamental analysis and investing in stocks, which are uh, doing who are doing well and are supposedly will do well in future also. So this video is basically regarding the long-term investments with a goal of achieving financial freedom. Uh, the money, if your money works for you, then is only the wealth is created. We have multiple times said this on this platform, and we have shared many strategies with you all. So this video is also in a step in that direction. Now, the disclaimer is I'm not a certified financial or a technical analyst. Please do consult your financial advisor before you trade in the stock or any of the ideas which are shared on the platform. This is purely for an educational purpose and to stimulate thinking in fellow traders. I strongly advise to acquire knowledge in stock market, and after you acquire the knowledge, first paper trade and then jump into the real sea to swim. Now the parameters what we are going to use today is we are going to use a very strong parameter. The basic underline is that the institutional players always like to play safe. They have done more research, they have more people with good financial acumen, and they actually pick out the real good stocks. Now we are going to use the same kind of a parameters. A promoter which has a belief in the company, signified by a promoter holding of more than 50%. Institutions believe in the company, both domestic as well as for the foreign institutions, and they should at least have 20% holding each, not combined. It's 20% each of them should hold it. Public holding should be less than 10%. So that it is a pretty tough criteria. Now, and that should be good profit making company over the last 3 years. We will use these all criterias when we are going into and finding out a company using screener.ns. So this is what is is the criteria or the filters we put up in the screener.in, and you can take a screenshot of it. And it is a very simple, only 4 lines. FII holding more than 20%, DI holding more than 20%, promoter holding more than 50%. That itself signifies that more than 90% of you can say stocks are with the promoters or with the institutions. Adding to it, we are adding the fourth criteria that a profit growth for the last 3 years should be more than 30%. And when we run it in screener, this is the giant, the two-wheeler giant TVS Motor comes into as a filtered stock. Now, if we see into the fundamental analysis of the stock is return on the capital employed is reasonably good, around about 19%. The return on the equity is 27.4%. We take it anything between 20 to 25% is considered good. Profit after taxation is pretty high, 1,600 crores. And the promoter holding in the stock is 50.3%. The last 5 year sales growth is 15%, which is reasonably good. Now, as we all know, TVS is involved in manufacturing the two-wheelers and its accessories. It makes two-wheelers of all the possible categories, that is the motorcycles, scooters, and the mopeds. And this is the only company which has a presence in the moped division right now, though the market is very less, but for a economically weaker sections, the moped is still the preferred two-wheeler of choice. It holds approximately 1/4 market share in the Indian and the domestic scenario. While if it splits it, share is of the total share is 72% is in India and 28% is outside India, predominantly in Nigeria, Bangladesh, Ethiopia, Guinea, United Arab Emirates, Kenya, Congo, and many other countries. It is one of the pioneers in launching diversified the electric vehicle portfolio in two-wheeler segment in this country. And it was the TVS Motor was the first and the only company to launch dual FI platforms catering to consumer cases, eco thrust fuel injection for enhanced fuel efficiency, and race tuned fuel injection for the enhanced throttle response. This all data I have taken from the screener.in. It has a tie-up with BMW Motorrad and the future technologies for the manufacturing of the electric vehicles. Also, it has tied up with Grupo Q of Nicaragua and Costa Rica for its electric vehicle components. It has also signed a 1,200 crores deal with the government of Tamil Nadu, basically for the design, development, and the manufacturing of the new products and the capacity expansion in the EV space. With the EV coming too much into it, TVS Motor is going to play a big role in electric two-wheeler segment. The pros for the company is it has reduced its debt. That is there. It has delivered a good profit, as we had said, around 19% over the last 5 years. It gives a healthy dividend of 21.3%. The face value of the stock is just ₹1. There are some negative points. Stock is trading at 17.1% of its book value. Promoter holdings has decreased over the last 3 years by 7.13%. I will not consider it as a negative point. This is a positive point for the company, because when I will come into the breakdown of the shareholding pattern, where there you will realize where the 7% has gone. Now, if you see in 2013, the profit was 438 crores. It is 10 times 11 years down the line. But for the last 6 or 7 years, you can just see there is a steady rise in the profit. As compared to 2023, the profit had risen by 1,500 crores. And the net profit is close to around 1,800 crores after taxation. The EPS is also showing a reasonably growth from 27.97 to 35.5. Prior to this, it was under 20. The compounded sale growth for the trailing 12 months is somewhere around 22%, and profit growth is 33%. The sales is 22% and the profit is 33%. Now, if you see, what they said was there was a 7% decrease in the promoter holding was. That 7% has gone practically to the institutions. It has now gone to the institutions, and we are anticipating, see, if you can see here is from 52.26%, they are close to around 50% only. But DIIs, FIIs from almost as low as from 9.85% has almost doubled to 20.83. Same way, the DIIs have decreased, but they are still holding on to around 20.26%. The public part has been stagnant around 8 to 9% only. Now, if we come to the technical chart analysis of it, it gave a breakout of its previous resistance level and is trading close to its support level. And I presume that in the next 6 to 12 months, it should be touching around 2,723. This is one stock which I personally feel should do very well in a long-term basis, seeing the growth of the EV sector, which is going to happen, and the kind of push we are getting from the government promoting the EV sector. This stock should not be missed because it holds around 25% of the two-wheeler share in this country. I strongly recommend everybody to do their own analysis and research before they actually buy into the stock. Thank you, everybody.